Hi, this is Jack from Alpha Charts with a state of the market video. Today is March 29th, 2020. Before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerance. All right, starting again with the SPX on the monthly chart. We're not quite at the end of the month, but I think this is a pretty amazing chart. Again, starting at 1932, straight up. And again, this blue line intersects roughly, we'll call it April. I mean, it doesn't have to be exact, right? So it could be May. Now let's go to the weekly. Now on the weekly chart, boom, there's your 2000 high. There's your 2007 high. Here's the blue line. Here's the intersection. And you can see how, April, May-ish is this area. Okay, so let's go to the daily chart now. I'm going to go to some candles here. Now, on the daily chart, I'm going to measure from top of the range to where we bottomed right over here. That's around a 35% decline. Now, we came back up, right? So this is A, here's B. Now, if we're going to go down and it's we'll call it a measured move type of situation, we're looking for another 35% decline. Well, going down to 35% roughly is, we'll call it right around here-ish, about 1695. So here's the interesting thing, is that 1695, right around here-ish, didn't quite come back to the retest. So I guess what I'm looking for is if everyone's expecting this to retest, when we come down, if we don't touch it, it may leave people, a lot of people, out of the move, right? The rebound move I'm talking about. Because everyone's expecting us to touch, 1575-ish or 1600, 1550, somewhere around there. Well, if we stop at a much higher level, right? If we stop at where is that? 1700, and everyone's expecting it to touch at least 1600. Well, and then rebound from there, there'll be a lot of people waiting into this area. So just something I'm watching, and one of the things I'm doing right now is just keeping a really good watch list for the leaders, if there are any leaders out there, right? Maybe DocuSign, that's one that I'm really watching. AMD, there's just a couple names that I'm watching right now because, this right now, everyone's expecting it to come, and I won't say everybody, but there's a good chance that it's going to come back down, retest a slow, maybe do something over here, which is in 2015, 2016 was resistance, right? Maybe this will act as support, maybe. But if we go below there, this is the level everyone's looking at. Well, I'm just saying, keep an open mind. Maybe we don't have to retest that exact level. Maybe coming down to 1700 or 1685 is good enough. And if they're true leaders, they should be holding up pretty good. And it may not be a bad situation to be buying in this area. All right, so that's SPX. Again, I don't think much more commentary is needed than that. It's pretty bad. We came back 20%, and most likely it's going to roll back over, and at the very least retest down here 21.25. At least that's what I think will happen, and I think there's still a good chance that we do move a little bit lower. Moving on to the Qs. Again, the Qs are holding up better than anybody else right now. Here's the daily chart. And you see the channel is still intact. And I'm going to just get rid of that. Channel is still intact. This I don't count as a break of the channel because we rebounded right back into it. So by far holding up the best of all the indexes. And when things do start to turn around, I think that this is the place where I want to look for opportunity. IWM, the Russell, came down, tested this area, bounced up. Again, look at these moving average. I mean, they are just screaming down. So most likely, at the very least, we are going to retest this area and probably test this area around 86 or so. Dow Jones, again, tested this important area right here, and it did bounce. If we roll over, which I think is the more likely scenario, we can drop a good bit further down. Going over the key subsectors or sectors, XLF, we broke down below this area, bounced back up, just kind of broke right back above it. But probably, again, I'm in the thinking of we're going to roll back over again and maybe come down to $14, maybe? Could be. We'll see. SMH. So SMH, let's go to the weekly on the SMH. So this was the 2000 peak, and this has been important, and we broke out. We came back, right? We kind of broke, or tested it at least. It bounced, right? Price bounced. But I still think that 100 level, that 100 is the key level. If we're above 100, things may not be as bad as we think. If SMH rolls over and starts breaking down below 100 and below 95, I think that things will get much, much worse. So this is one of the key things. Again, I will trade SMH and components of SMH, but I also use it as an indicator. Looking at lumber, because I always like to look at lumber. Again, key area. We bounced. We're still on the weekly chart. If we roll over here, I think that it could go much lower. And just looking at home builders real fast, you can see looks a lot like lumber. Key area, went below it, bounced up. If we roll over here, home builders, which is a driver of the economy, right? Unemployment and other parts of the economy. Rolling over here would be a very negative sign. Looking at gold, broke out, false breakout, came down, now coming back up. So choppy whipsaw mess. There's probably a big move coming. I just don't know which way it's going to be. And really, GDX, the gold miners are terrible. I mean, look at this. Went from 31, the low was 16. I mean, these moves are ridiculous. So something I'm just staying away from. I don't like moves like that. Looking at credit spreads. So looking at so we had this big spike in spreads, right? So as they're widen, I mean that's very negative on the economy. We came back in, and so we'll see what happens next week. This was such a big move up that I wouldn't. This tightening doesn't surprise me much. We'll see if it manifests into further tightening, and then that would be again very, very constructive, right? And if SMH holds and this gets constructive and this credit spreads come back in, well then maybe it's more positive price action is coming forward. We'll see. But as of right now, all these are still moving. All my moving averages are moving up, and it's just something. Again, the direction of this I think matters. So looking at VIX, big spike up, and now we're consolidating up here. And I kind of joked around on Twitter a little bit saying, oh, is this a bull flag? Now, I don't think it's actually a bull flag per se, but I do think that it's a consolidation area, and there's a good chance that we do get another spike higher in VIX. I mean, that would not shock me because the trend of volatility is higher, and that's just what it is. Value line geometric index. How is the median stock faring? Not so good. A nice rebound this week, but things are screaming. Look at these moving averages. They're all turned over. They're all bearishly aligned. They're all moving down. That is again very negative on on the average stock, right? I mean, just looking back, I mean, it's just not looking good. I've been watching copper futures versus gold futures, and I think that's an interesting chart. Let's go to line chart here. So you see, this area was an area I was watching. We broke down. This area was an area I was watching, right? We broke down. And zooming in, if you look at it, we broke down, and now we're consolidating near the lows. So if gold is outperforming copper, that says, future economic growth is probably skewed to being more negative than positive. At least that's the way I read it. And until we can see a bottoming action in this ratio and maybe retake some of these levels, I'm still more in there's more bad news, worse things to come than good news coming. So that's just the way that I'm reading it. Oh, let's look at the put-call ratio. Again, you guys know what I'm looking for. I'm looking for a big spike like this, right? We haven't seen anything like that. Nothing even close, right? I mean, that's 1.5, right there. That's 2, and that's 3, right? I'll even listen, if we get into this 2 range, that's something. I think we're more in a 2008, 2009 scenario. So getting up to 3 would be, between 2 and 3, anywhere in there would be, I think, a positive for the bulls. I think that would be maybe a capitulatory type of, scenario. But we're not seeing that. We haven't seen that yet, right? I mean, nothing at all. So I kind of showed this on Twitter the other day, and this is basically where are we in this scenario. Well, with that put-call ratio getting up into that 2 to 3 range, that would give me this capitulatory looking area, right? I don't think we're there. I think we're closer to fear, maybe moving towards desperation. I still think that there's a way to go in this. Again, just my opinion. Last thing I'm going to show is going to be this. All right, so this is coronavirus global cases from Johns Hopkins, okay? And going back to January, you see a big up spike. This was mostly China, right? Then it flattened, and now a big increase again. Until we can start seeing this flatten again, it's going to be very hard for us to for the stock market to price in good news. Here's a bar chart of this, and this is new cases, right? So this is a bar chart of the new cases of coronavirus, and you can see that there are still lots and lots of new cases. We're up to 67,000 new cases a day. It was 63, then 61. So we're still increasing in new cases. That is just something that I think that we need to be very, very aware of. That once we start to see this peak out, then the market may also start to peak out. We will see. Again, I hope everyone stays safe out there, and in the markets and in everyone's personal life. I know everyone is kind of self-quarantined right now and social distancing and all that kind of stuff. But, we all do our parts, and we will all make it through this. Everyone take care and have a good week.